I just reviewed a business that should sell for over $6 million, but they're likely going to end up selling for less than $2 million, with that $2 million heavily financed by the seller. Now, looking at this company, there are a couple issues. So one, the profit and loss statements from QuickBooks showed in 2023 that they had about $1 million of net cash flow from the business, while the tax returns only showed about 100 grand. Now, looking at the two statements, even the revenue line didn't match, which if you're looking at both cash accounting and cash taxes, should have been the same. So basically they just were filing a bogus tax return to minimize taxes. There are legitimate strategies that can show less on a tax return, but they weren't those. That's not what was happening. But on the plus side, the 2024 P&L is showing $2.7 million in net cash flow. So the business is generating a lot of cash. But overall, just the books were just really sloppy. We're pretty sure there were some expenses missing in the 2024 number. There were some lumpy things in the revenue. And then of course, you lose a lot of trust by the fact that those 2023 P&Ls and tax returns just didn't even rhyme with each other. Now, going through making adjustments, we think this business probably actually really makes about $2 million per year rather than 2.7 advertised. But still, that should lead to an easy $6 million or well over that valuation for the business if the books and records were in good order. And just a quick note, potential buyer brought this to us to look at it for them. If we were acting as an advisor to the seller, we would have had them go through and do some cleanup and fix these things. But we were approached by a buyer to take a look at it. We don't know the seller. But we think there's several $1 million of additional value that can be brought to this business just by cleaning up those books and just by cleaning up those tax returns. So one of the reasons why this is gonna likely sell for $2 million rather than $6 million plus is because it's not financeable. So the tax returns, you can only borrow maybe up to $200,000 based off what the tax returns show. So you can only get about $200K towards the purchase price. And even then, most lenders don't wanna bother with a $200,000 loan. So those are actually, it's easier for borrowers to get $2 million loans than $200,000 loans. So that's gonna be a really tough deal to get done. So that means that the seller is limited to people that are either going to bring cash, and cash buyers expect to buy at a big discount, or they're going to need to seller finance. So in this instance, they had proposed seller finance to the potential buyer. I think they said they were going to finance 75% of the sale of the business at the $2 million valuation. So the buyer only needs to bring 25% to the table. Plus, the buyer's going to need to bring working capital as well. So when you're looking at tax returns, lenders will add back a few different things, and we already included this to get to the $100,000 that the business generated. So automatically, when a lender looks at a tax return, even if they're showing a loss on the profit and loss, they're going to add back a few items just by default. So that's going to be the depreciation, the amortization, any interest, and the salaries of the officers. Now, it is possible to get credit for any personal items that you might be running through the business, but you're gonna have to show those that are very well documented, and you're gonna have to show that it very clearly was not a business expense, which of course is tough because if it's not a business expense, you weren't supposed to be running it through, but we know that almost every business owner out there does, and the lenders know that as well. But you're gonna have to document every one of those things, and you're gonna have to prove beyond a reasonable doubt that those were truly personal expenses. So this particular business owner, they want out, they're ready to sell. I think their sloppy accounting and sloppy record keeping is going to cost them well over $4 million in total. And then even they're going to have to seller finance most of the deal. So rather than taking home a $6-7 million check because they didn't go and do the cleanup ahead of time, they're going to only get about $500,000 up front. Now, this is why it's really important to work with an advisor that's going to do the work ahead of time to make sure the business is truly ready for sale. You're gonna need someone with a lot of deal experience that can present the business in the best light to get the highest price. If you've got any questions about getting your business ready for sale, leave them in the comments. And if you need help, reach out to us and we'll help you.